All right, these are the Mondays that we have come to expect, right? Big moves, big gaps, big moves to the upside. This is what we like. This is what we have kind of grown accustomed to seeing since the vaccine news started coming out and on this current intermediate run. So, does that mean here we go? Is the sell off over with? Is this the bounce that will start us up on a new intermediate run? So, I'm going to break that down in today's video and see, especially the Nasdaq. What does it look like now? Because it was the one that was struggling the most. And how do we reconcile this idea that only one of the indexes pulled back and the others hadn't? So does that tell us anything about this bounce and what we should expect going forward from here? So I'm going to break all that down from a technical perspective today. What's driving this action and what drove today's bounce higher? And then we're going to take a look at a stock that kind of broke out to its own 52-week highs after really kind of a nothing move for so long. And we'll talk about how to trade that. So let's go ahead and get started. Today is Monday, March the 1st, 2021. Shout out, happy birthday to my father-in-law today. This is the market outlook from marketscholars.com. My name is David Settle. All right, well, let's start off taking a look at the S&P 500 with the market forecast indicators. You can see we have a bounce up on with today's rally. All the way back up above the moving average, easily above the moving average. So we went from light pink shading, yellow line, bullish pattern, to dark green shading and a green line. The intermediate lines turned up, being above 50. That's how you got the dark green shading. The near-term line and momentum line both bounced up from these oversold levels, slightly oversold levels, back up to near the midpoint on the near-term line. So most likely going to pop up, and of course the intermediate lines below the market sentiment line, but almost to the 70th percentile. So it's actually still above the 60th percentile, which is the strong bullish level for it. So, but it's not the S&P that's had the issues. It's been the Nasdaq. The Nasdaq, you notice, had a really good return here today. But and it got back above the 23% retracement, which, again, it had broken down below just a couple of days earlier. Had broken down below here, but gotten back up above it, which is actually a pretty decent sign after because again, you don't start an intermediate pullback until you actually break it. And we did on Thursday and then held it on Friday at the 38% retracement for support, and then boom, bounced right back up above it. Not back above the moving average yet, though, like the S&P 500. So we'll kind of keep our eyes on that. You notice we never did get an oversold level. He never did get an oversold level there on the near-term line, even much less the intermediate line, because we had these long lower shadows that kept the near-term line from really dropping the sharp levels. Excuse me. Of course, the Russell 2000 never even got below the moving average, and he's easily still above the 23%, and that's kind of what we have to remind everybody. As bearish as things seemed on the Nasdaq, breaking below the 23%, getting to the 38 of the intermediate pullback, and obviously a lot more bearish than the Nasdaq, but that bearishness hadn't gone out. It hadn't even broken the 30-day moving average on the Dow. It didn't break at all the 30-day moving average. In fact, a little bit of a Morningstar candlestick pattern here on the Russell 2000, and then of course on the Nasdaq we saw. But the S&P 500. We never did break the 23%. I've always told you that any moves between 0 and 23% retracement is just noise. And we can go down and we can go up very, very easily in this level, in this range. It gets a little tougher when you're breaking below the 23, which is why, here we are back up above it. Now we're not back above these highs. So we'll kind of watch these levels here in the next day or two to see if we can really follow through with this, because that would be significant. But again, it's once you break down, it's kind of hard to get going, but it's easy to go up and down when you're between the 0 and 23. And that is what's the case on all these other major indexes except for the Nasdaq, including the S&P 500. So we're actually back, and again, it's still up above 60, and 60 is anything above 60 is bullish territory for an oscillator that has the percentile that's measured by percentile, like the market forecast is. So anything below 40 is bearish, and anything between 40 and 50 would be kind of neutral on that side. So we had pulled back, but we still were above 60. So we're still in kind of this bearish or bullish territory, which is why, again, light pink shading, yellow line ends up being a pretty bullish pattern. And when you see how far below the moving average, we had fallen on Friday. By the time we had closed the day on Friday, you see that we ended up being down. What is that? 1.14%. And the key level to watch for, as you can see over to the left, the key level to watch for when you're going to start a pullback is to get below 1.5. So getting to 1.14 isn't quite there yet on the S&P. On the Nasdaq 100, we did get below 5. We went, or 1.5. We got all the way down here, as you can see, down to about 4% below. Was it 4%? Yeah, we got 4% below on Thursday. And you can see that's about where it needs to get to when you have the intermediate pullbacks there. All right, before we check out some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That notifies you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That lets us know that you liked our video today and that you want us to do another video again tomorrow. Quick way to give us feedback. If you don't like our videos, of course, you don't have to click on anything. You don't even have to watch. If you do like our videos and you want to let us know, you can do it with one click. You can do that right now even while you're watching. Also, while you're down there, comment. What did you get out of our videos today? What stood out to you? What questions or comments do you have? Join our website at marketscholars.com. There's a link popping out there in the top right corner of your screen. Click on that link to subscribe to our site for free. You get access to our Market Outlook forums on our website. So you can, it's like a message board for everybody who watches Market Outlook videos. You can be able to interact with each other. Also, follow me on Twitter for more content in between the videos from day to day. There's my handle here at DavidSettle42. And join our Market Outlook Facebook group that we've created. If you're watching us on our blog, you can check out our Market Outlook live videos. Every day I do the Market Outlook. I also do a live video at 3:30 Eastern Time. That's how you get access to it right here. Again, that's available for all of our Plus subscribers and our Premium subscribers. All of our Plus subscribers and Premium subscribers also get access to all of our trading rooms, which you can see up here, upcoming events on the right. You can also get to our trading rooms right here. Come down to the bottom of the page. You can see that you have the social accounts here, Twitter and Facebook, Market Outlook posts. Click this heart. It opens up this new tab. Hit that like button. Also click on this thumbs up icon. Opens up another new tab. You can click on this like button as well. Again, the more you do that, the more our content gets out to more of our followers. Right here, you can see more of our followers will see our content. It also benefits you because the more you, Twitter and Facebook will promote content in your timelines from the accounts that you engage with the most. We try to make it really easy for you to engage with us here. All right, let's get back to the charts and let's take a look at the long-term chart. As you saw, we had a little bit of a transition candle. Interestingly enough, today's big candle still results in, it's only one day, right? But we still got 4 more trading sessions left. But as of right now, it's pretty much another transition candle there. So it kind of shows you how bullish we already are. It's going to be kind of hard to. It's not like we according to this chart, we have hardly had a sell-off, right? A lot of people kind of think we did, that was a sell-off, and hardly a sell-off when you look at it from a little bit bigger picture, right? When you take a look at the 3 green arrows, obviously we did get 3 red arrows, and of course we bounced right off of that, and that's what happens a lot of times when you get 3 red arrows on bullish trends. You tend to bounce right back up. Lots of volume the last few days, and still, even today, are nearly 1.5 times the average volume. If you take a look at today's, at the 2-line versions of those 3 green arrows, you can see the MACD had barely gone negative but popped up. Stochastics had barely dropped below 50 and popped back up. So we'll see if this is more than a one-day thing. We had a couple of days below the 17-day moving average, and boom, right back above it. And right back above the 8, and the 8-day, of course, you can see is back above the 17. That's why the MACD is positive. So pretty decent patterns across the board. The RSI is back up above 50, though not above 60 yet. Back to where it would be bullish again. We are back at, we did drop significantly. We dropped all the way to below negative 200, and that typically doesn't happen. So that's why I'm not like as good as this day was. I'm still not like, oh, here we go. Like we are now on a new strong bullish move, and this was the sell-off. No, I don't think that's the case. I think right now we're between 0 and 23%, and it's really noisy. But when you look at like indicators like this, and you look at like the directional movement index, and you see how bearish we have been, and we are hardly like bouncing up to really strong bullish signals on any of these indicators. Looking at the ADX, we talked about how we had dropped down to 0, and today we're bouncing back up, but not back up above the 0.5 or the 1 mark here yet, and not back above 50 here either. So we're not quite back to normal, even if we did jump back up above the green line and we're still above the cloud. But you notice, because we've gone sideways for so long, we've gotten a lot closer to the cloud. So it's going to be a little easy, and the cloud's getting skinnier, so it's going to be a little easier to break through the cloud if and when we actually do get a real exhale and not one of these kind of pseudo exhales that suckers a lot of people in thinking that these are the quote unquote pullbacks. All right, when you take a look at the intraday chart, you can see, look at the bounce, the gap up, which again you would consider to be a regular common gap. So at some point in time, you'd expect that to get filled. You see we got up to this volume node, and now how hard is it going to be to get you through that volume node? So again, how easy it is to fill that gap of volume on the downside, it's just as easy to fill it up on the upside. And we saw that today, the power of a gap in volume. But now we'll see the power of a resistance in volume to see whether we can actually break through that, or if we end up holding that. You can see the low tag is going to be coming up really quickly, like just in a couple of days. Your low tag is going to be right there, and to have the high tag on the left and the low tag this close to the right, that's not the most bullish patterns. We already see that to an extent on the Qs, because the Qs did get that low tag there. So, and you can see this doesn't look nearly as bullish as like what we saw in the SPY. So don't get too wrapped up in today's buying thinking that we're starting a new multi-month rally here. No, it was a snapback because of how significant some of the selling was this last week. But it's definitely not correcting now the sell-off, and we're starting a new intermediate run. Hardly at all. Let's take a look at the today's volume in the trading range. So you notice the trading range here is 10 points, and that doesn't include the gap. So 380.36 to 380.57. So actually just a little bit of a gap there. And then you notice again 12, so probably about 10.5 points was our gap. That was our total range. The volume at 105 million shares traded. So when you look at that in context, you'll notice that 10 points is way up here, so it's really starting to bring this up, and 105 million is up here, so it's bringing these lines up. Those aren't bullish ranges, and those aren't bullish volume. When these lines go up, it usually doesn't mean we're bouncing. It usually means we're in the process of dropping, and as you drop, you tend to get big moves to the upside when you sit down. Look at these. Last year, we had big moves to the upside while we were dropping. Big move to the upside, continue to drop. Big move to the upside, continue to drop. So again, don't get wrapped up into these. Not that I'm saying we're in COVID drop, hardly at all. But when we are in pullbacks and we get these big bounces with big ranges and big volume, that doesn't necessarily mean that we're A-OK again. And when you look at the volatility index, of course, volatility dropped, and we did drop back below 90%, but you see how we're starting to get higher lows. So where's the next high going to be? We got up to 90%, we got up to 95%. Is our next bounce in volatility going to get us up to the 105%, which would signal the beginnings of an exhale? So I would actually lean more towards that direction than the direction of, this was our spike in volatility and now we're going to bounce. No, that wasn't a spike in volatility because we didn't get up high enough. There's still, if we're going to get an exhale, there's still a spike in volatility coming, and that wasn't it. And you can see that really wasn't it. Back in January, and that was a much bigger move higher than what we saw here. So don't get wrapped up. That's why we look at the same things, we do the same things all day after day, week after week, so we don't get worked up about a single move. We look at all these individual moves like today's in the context of what we look at all the time, so we don't get batted around with the narratives of the day. We say, okay, this is still how we see it, and this is still, we still have the same process that we go through day after day. So to summarize my technical outlook, we've been kind of in the workings of an exhale. At least it started in the NASDAQ. It had not reached any of the other indexes yet, but was starting to get some we were starting to get some signs in some of these other indexes. We got a good strong move higher today with a lot of volume, a big move. Don't get suckered into thinking that this is the bounce off of the low point, right? The sell-off low. We haven't had a sell-off yet. It's been a lot of noise, and we are still getting noise. And today's bounce would still be considered noise. And if the breakdown of the Nasdaq is telling us that there's an exhale coming sooner rather than later, and we're starting to see a little bit of volatility too with higher highs and higher lows, then we might be getting that sell-off or that intermediate pullback starting sooner rather than later, based off of the precedent we're seeing in those tech stocks. So what do you think? Do you agree with that? Do you disagree? Let me know in the comment section down below, especially if you disagree, right? Comment down there as to why and what are you seeing, right? Everybody's got an opinion, of course, but what's driving your opinion? What charts or indicators are you looking at that tells you why you're either a lot more bullish than I am or a lot more bearish than I am? All right, now let's take a look at how what's driving the price action today. So let's come up. I mean, look at that move. I mean, again, you see where the strength has been in the market. It's a little bit of a, little small exhale, but man, the small cap stocks really kicked butt again today. So let's take a look and see how March came in. See if it came in like a line. You see small caps did very well, up more than 3.5%. Emerging markets bounced up 2.75%. So they have been pulling back pretty decently. So a little bit kind of a technical oversold bounce for what we saw in these indexes. If I were to go out a little bit further, you can kind of see where the pullback really started. Looks like it started on the 25th. So I'll come over here to the 25th. And you can see here that small cap stocks did have a pretty decent decline during was it that pretty much 2 days essentially, or 1 day. Here, let's take a look at it from this perspective. Let's come over. Got so many different charts up here. Let's look at where it really started to come down, starting on the 16th. So we'll come to the 16th here. Okay, so you can see small caps really started to come down here. Emerging markets were really oversold, especially after this day, and the Qs were down 7%, and small caps were down. And so you can see now why they rallied as much as they did. Gold didn't. Gold had been weak more recently and stayed down, and commodities also are continuing to come down. So it kind of shows you where the bounce actually ended up occurring. It looks like it was still kind of more limited to these equity classes that had been beaten down so much. Bonds stayed down, so that means yields are still higher, and that's what was driving a lot of the weakness in equities. So that hasn't changed. Commodity prices came down while stocks rallied. That's different because commodities were rallying with equities previously. In fact, were outpacing equities previously. They came down, and you can see international equities. The dollar was slightly higher today. In fact, if you look at the dollar index, something that we've been closely monitoring on these videos to see, okay, how is that doing? Because if the dollar is going to rally, that's usually associated with risk aversion, and you can see the intermediate lines turn back down. We've gotten back after bouncing down that high upper shadow away from the 23% retracement, back below the 38% retracement today, and we're so far in the first couple hours of this period starting a little bit lower too. So you can see the dollar's continuing to move higher, so the euro's down, and that's not necessarily a risk on pattern. You can see the higher yields that we've been getting in the 10-year yield, and you can see also on the 30-year yield as well. The higher yields we've been getting lately, a little bit of a pullback here, but the higher yields we've been getting lately, and then today's, you can see we're bouncing back up today after the drop on Friday. And then look at TNX, and you can see kind of slightly lower there. So long-term bonds still looking very, very bullish, which is what you see on that chart. This is what you're seeing here is those long-term bonds. And then finally, I wanted to take a look also at, sorry, not that one. As you can see though here, how strong. I mean, look how fast that yield spread is rising. Kind of very similar to late 2007, when it was really rising pretty rapidly. But that yield spread's taking off like a rocket, being that short-term bonds, the overnight rate not moving at all. That's going to catch up to the Fed at some point in time. Here's your commodities, as bullish as they've been. They're in pullback mode, and this is the worst short-term sentiment that we've had since this whole intermediate rally started, coming off of an overbought cluster and a mature trend. it's looking like we are in the mode right now. From a short-term sentiment line standpoint, we're in the mode of the beginnings of this intermediate decline. This is the kind of the longer-term move that you see here, but this is the current intermediate rally that we're on. So obviously the intermediate line the decline doesn't start until the 23% retracement, but that's a little bit of a red flag that would suggest that kind of a break is coming here pretty soon. And of course, that's been a big driver of risk appetite here lately on this particular intermediate run. All right, now let's take a look at the sector moves and see how they drove today's rally. And you saw energy has been doing very, very well lately in financials. Well, they did well today. Now at the beginning, see, energy really started off strong, and so did financials. But look at what else did well today, at least for the early part of the day. Utility stocks. So you had, energy, financials, industrials, materials, those sectors that you expect. Technology ended up being strong today, and utilities started off strong. That's not typical. In real estate, you can see really diving down. So not so typical to see utilities doing so well. It did pull back, as that was a surprisingly strong sector. It did pull back by the end of the day. But there's your safe havens, all kind of, real estate was barely up at all. And if you look at it this is the thing that always is so illustrative of what's going on. Look at discretionary still below its moving average. It's barely popping up to it. Light green shading and yellow line here and dark green shading there. But there's your strength in these cyclical areas. And look at the weakness in these safe haven areas. So very, very weak to the point where they're kind of really strongly oversold. That's why utilities did so well. It was coming off a couple oversold clusters. Healthcare also had an oversold cluster. So you can see why they're doing so well. Light pink shading and a yellow line on real estate. So it bounced up a little bit, at least early, before pulling back down to the lows. But that's where your weakness is. And I showed you this chart. This is the relative rotation graph. And you can see there's your cyclical areas over here. They're going up so fast, up to the right, going through today, right? Going through all of today's moves. There's your safe havens over here, utility staples, utilities, healthcare, and real estate over here. They're starting to move up. Little momentum, still negative relative strength, so they're not there yet, but we'll see if these high flyers start to roll over. Your cyclical areas already are. So, your other cyclical, technology, discretionary, over here discretionary, and communication services moving down to the left. So you can see the rotation is starting already from these kind of risk-on type sectors to more of these risk-off sectors over here on the left. And that brings us to one of the areas in the cyclical area that's actually kind of bottoming out already, and that's discretionary, more so than any of these others, right? They're still moving down to the left. These are really high flyers. But you can see discretionary is kind of doing its own thing, and because it had been more weak, and it's already turning up a little bit there. And that's being reflected in some of its constituents, one of them being Skechers. Let's take a look at Skechers here. You can see the nice little break. It's been sideways for so long, but a pretty decent breakout move today. In fact, kind of breaking out to new 52-week highs today. A good close. The market fork of the intermediate line closing up above its market sentiment, dark green shading and a green line. Looking at the 3 green arrows for Skechers, you're obviously getting 3 green arrows here today. We've been kind of up and down 3 green arrows, but today's is the most volume. We actually got to up the average volume there. You take a look at the other oscillators for Skechers, and you can see its ADX was all the way down below 10, breaking up above 25, breaking down. That's a really good pattern because you've been so, really non-directional at all on it. So you look at the RSI and the CCI, and you can see breaking above 200, breaking above 60, a good bullish breakout type pattern there. Looking at the Ichimoku cloud, we are up above the cloud now after being kind of flirting with the bottom of it. And look how noisy we've been. It's setting up for the beginnings of a trending move. Here's the Bollinger Band. We actually closed not only in the upper quartile, but above the upper band and getting up above the value area on the 1-year chart, as well as on the 2. When you look at COVID-2, up above the value area of the 2-year chart. So really good type of breakout move. But again, you know the market environment, and it's not, it doesn't have a, it's not the most bullish pattern yet. We're not quite getting, full on breakout, but a lot of breakout type signals. So I want to do a bullish trade, just not as bullish of a trade. So if we take a look at stocks here, you can see, okay, and you notice I already did this today in the Market Outlook Live, but if I sell the 37 strike in the mid 30s in the delta, buy the 35, I think we end up getting 50 cents for it. So you sell the 35, sell the 37, buy the 35. So as long as we stay above 37, and my break even's at 36 and a half, there's my full position size, so I don't have to worry about earnings here. And if you take a look at its chart here, then you can see, okay, well, the 36 and a half is at that volume node. So as long as we stay above this support that we just broke up above, essentially, and this is what it looks like on the intraday chart. So as long as we stay above this area, the midpoint of this 4-week range, then we're set, right? We can continue to make our money. We've got some time. It's actually, I think it's up a little bit already. If you take a look at, where is it? Sketchers right here. Down just a smidgen. But you can see how the stock is already moving higher. So if it continues to make that move to the upside, very, very little volume up here, then if we can get half of our max gain early, we'll take it. Especially because we have so much time left until we get to the April expiration. So we'll kind of keep our eyes on that as we move on the next week or two, as Skechers, see if this breakout pattern takes hold over the next week or two. All right, well, that does it for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forums. Remember, our free subscribers get access to that as well. So open up any new threads there, reply to anybody else's threads, and let's keep this conversation going in between videos. As always, thank you for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon, as well as on Facebook and Twitter too. Like us on Facebook and Twitter as well. Comment on our video. Have a great rest of your Monday night, everybody, and we'll see you all next time.